Well, moving on, in a conversation we had with Kotak Mahindra AMC's Nilesh Shah, he spoke about India's growth slowdown, which is being looked at with an over-bearish sentiment, and tells us if the sentiment will pick up going ahead. Listen in.
So again, you have to look at the data. Rupee is depreciating, but which currency is not depreciating?
Yeah.
Corporate earnings growth is slowing down. Okay, so do you expect even 500 wouldn't be achieved? And the best thing is to ask that pessimistic guy, are you willing to short Indian market for next 10 years? Unlikely he will say yes. Are you willing to short it for 5 years? Unlikely he will say yes. Are you willing to short it for 3 years? Unlikely they will say yes. If you're not willing to short the market and you sound to be bearish, then there's something wrong. We are not at all saying that these trends are not there. Economy did slow down in second quarter, but second half it will bounce back. Corporate earnings growth, of course the base has increased. From 4 lakh crore profit in 2020, we are at 15 lakh crore. Now no one can expect that over next 5 years, 15 lakh crore will become 60 lakh crore. So growth will slow down because the base has become bigger. But will the market continue to reward investors? Answer is yes. On a price to earning basis, India may look expensive, but on a price to earnings growth, India doesn't look that expensive. It is still somewhere in the middle. And investors will invest over a longer term horizon. We tell people, please don't invest with 1 year view. If you are coming in equity, take a 5-year view. Second, have moderated return expectation. Last 5 years are exceptional, broad-based rally, 300 stocks out of 500 stocks almost doubled or more. Now that's not going to happen. The valuations are now at a fair value level. So your returns expectations will have to be moderated. You will have to invest for longer term. There will be volatility. We are down 10% and people say, oh, markets have crashed. China is at the same level for last 17 years. No one is complaining there. And if they complain, they'll be put behind the bar.
We're definitely not there.
17 years, no return, and people are happy.
Yeah.
Over here, we are probably negative return for 6 months.
If they're unhappy, we won't even know. So that's what China.
And they can't even express. And we are down for about 6 months. And people are saying, oh, our markets have crashed. So we'll have to differentiate noise from the news. An investor can make money if they take a longer term view, ride the volatility.
Just on that point, I'll follow up on lowered expectations of returns. To what extent? What is the quantum of lowering expectations? And I ask this to everyone we speak to, because a lot of new investors who've come in the last 3 or 4 years have not seen this kind of a sideways market where there's no real action. They're used to a different kind of a pace. It's become a bit like rummy. So what happens to their expectations and how much do they need to be lowered?
It will have to be significantly lowered. One, our inflation has come down, so nominal return will fall. Second, the base has become big. So today people are expecting 20-30% return. They are most likely to be disappointed. The numbers will be probably high single digit to low double digit.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.